bit into the gold mood with Mr. Issam Istanbuli from Windsor Brokers. He's a Chief Market Analyst. So Issam has more than 13 years of experience and is currently the Chief Market Analyst with Windsor Brokers. He has extensive knowledge and experience in gold trading and hedging funds. The topic for Issam is going to be how gold has proved itself and see where it's heading. So please welcome Issam to the stage.
It's my pleasure to meet you all here. My name is Issam Istanbuli. I'm the Chief Market Analyst for Windsor Brokers. Windsor Brokers have been in the market in the MENA region for the past 30 years. I personally have been trading with Windsor Brokers from my young ages. It's like almost now 16 or 17 years ago. That was my first trade I ever made. We are at Windsor Brokers. Maybe from the old traders, they know about us here. We have been involving with many events and have already won some good awards during the events like this we are doing now in Dubai. We have our offices now in Jordan, we have in Cyprus, the headquarters, we have in China as well. And we're soon in Malaysia. We have been thinking about what we need to talk about and what the things that may concern the people these days. That's why we chose 3 titles, to be honest. First of all is why trading is important for securing your assets. The second one is how gold proved itself during let's say the last 40 years. And during these 40 years, we have seen a lot of movement, believe me, in the market. And gold has stepped forward for each one of them. Then the last thing that we are going to talk about is where the gold is heading. It will be like an extra signal for each one of you that could be a good signal for your next investment. So, we all do know that the FX market in general is the natural development of the barter system. It has been developed, and it's the natural development of the barter system where the financial market is now standing. So, let's say we need to go for an investment. The worst investment that could ever be made from anybody is buying a car. Although, if you buy a car, you can secure your worst investment by the end of your, let's say it, trading cycle for not losing your worst investment, which is the car. This is how it goes. In 1979, this E-Class Mercedes, which I like, to be honest, I have one till now. And the E-Class this year, those 2 cars still have the same value till the moment. How? In 1979 also, we can see that the average of gold was per ounce $310. In 2018, the average prices was $1,300 during the year. So, what we do understand from that. This is how it goes. With a simple calculation we can do, in 1979, 1 kilo of gold used to cost $9,950 on average. The Mercedes-Benz used to cost $19,900, which is almost $20,000 by that time. In 1979, the Mercedes cost 2 kilos of gold. Today is the same. In 2018, the ounce is $300,000. The average price is $42,000 per kilo. Mercedes-Benz cost $84,000, which is 2 kilos of gold as well. This is how the economy works. This is how the things work in the financial market. Assets should always stay where it stand. And the best thing to measure things by each other is always gold. That's why we came up with something called Gold Benz Index, which is mean if the prices of the gold are too high or the gold is too cheap, how could you measure it? One of the things you could measure that, for example, the Mercedes price. Or, on the other hand, there's some people who use the oil price. That's why there is also something else called gold-oil ratio. Okay. Let's take a technical view for the gold price during the year of 2019, and what we do expectate during the 2020. We do all know that the cycle of the economy goes in 5 phases, starting with the peak, then the recession and the trough, okay, then the recovery and the expansion. What does that mean? And what we are facing now. To understand that, we should know how the things or how the world is look for the challenges that's facing now. From the American side, during the last 11 months, the deficit has reached over $1 trillion. This is the first thing we should look at. The other thing is, President Trump is keeping, like almost every day, pushing on the Fed to cut the rates, and he won't mind if the rates goes sub-zero. On the other side, in the European Union, the economy is shrinking for all the numbers we have seen, and we are expecting the market to do a recession, and we think we are there now. That's why the European Union, or the Central Bank of the European Union, has cut the interest rate on loans and start a $20 billion quantitative easing. So he start to inject the money in the economy, trying to make things work out again. Okay. On the other hand, the bonds, the yields are turning negative, especially in Europe. What does that mean? When the central bank start printing extra money to inject it in the economy to start things work out again, for example, in the industrial side, that means at the bottom of the line, there's going to be a lot of cash between the people's hands. Okay, that's fine. Everyone loves to be rich. But the thing is, where this money will go at the end, after taking its cycle. It's a matter of time before it's go back to the central bank again. In this case, the bank will look for an investment to pay for these guys that they put the money in the banks. So the banks will start looking for investment, even if those investments will cost on a low rates. But the thing is, if there was no rates, what will the banks do? And that's what we are seeing now. They will start letting the people, it's not yet on the retail side, let's say it like that. It's not yet, but they are going at the end to take charges from each individual, put money in the bank account. So if you have like $1,000 or $1 million, when you put it in the bank won't give you an interest. It will start charging you for that. So it's just a matter of time before that happens. Okay? Fine. Let's take a look at the gold during the last 3 years and the 2019. We have noticed that in 2016, 2017, and 2018, the gold has been moving in almost ups and downs without any clear direction till the mid of 2018. We have started to see a pattern start to concern us, and we did, by the way, call that at Windsor Brokers. We saw a very familiar, for technical analysis point of view, where the gold is heading. The pattern we are watching here, the curve that we are seeing already in the red line, and the other two on the silver line, or the gray line. It's a pattern that's called cup and handles. Technically, what does that pattern say? Once the price break over the neckline, the black one, it should move exactly from the neckline, it should move the distance from the bottom to the neckline. If you take this distance and place it from the place where the price of the gold, you break that neckline, it should be your primary first target. And that's what happened. When we called 1560 for the gold as a price, some say, no, it's going for the 17,000, and some say we're going to 2,300, I believe, yeah? Yeah. We said, no, let's stand there for a bit and see what's going to happen. No, now the thing is, this pattern has already done. Sorry. Okay. Now, this is gold. A few days before I came here, I had an expo in Jordan. We've been talking about this. We noticed also that the gold, this is like a depth, like a view in the depth of the gold. We have seen the gold reach 1560 and start going down. Once this pattern appears in front of us, we have stand aside from the gold, predicting that the market may start to go back down again. Why is that? But when? This is another pattern, we call it head and shoulders, start to form. It's not yet completed here, but it says like so. If the gold price break 1,485, it should back and shrink again. Let's see where gold is heading now. This was last night. This was last night. Before I came here, I made this slide and I added to what we are expecting now for the gold. We noticed that the price yesterday broke under 1485, made a low about 1463, I believe. Yeah. And then some data came out from the United States side, telling that the industry is going bad and everything, and market was expecting that, by the way. That's why we believe the gold is going to back down again, as long as it is holding under 1485. So, where would it go? Now we are in Windsor, we call 1410. We're expecting gold to reach there. Once the gold reached that level, we believe buying your Mercedes again will be cheap for the coming few years. Thank you for being with us. It's been a pleasure meeting you all. We are happy to see you all at our booth. Thank you.